listening to the Non-Del Influencers Podcast, brought to you by First Funding. Join host Matt Coles as he delivers powerful conversations to help non-delegated lenders succeed and scale in today's market.
All right, everybody, welcome back to the latest episode of the Non-Del Influencer Podcast. I am very excited. I have a dear friend, Mr. Michael Neill, with NEXA Lending. Mike, thank you for taking the time today. Super excited to have you on this because you are a legend in the non-Del field.
That makes me sound old. That's all I just heard.
Well, that is true. When you are a legend, it does come with a certain vintage, I guess we'll call it.
When you start out doing 1 or 2 loans a week and then end up doing, $1,500 a month, it's
nice.
nice.
Well, again, thank you for your time. And, you and I have had a very close relationship over the years, met at a lot of conferences, had a lot of in-depth conversations about this space. And you have a real passion for the non-Del space. And can you take me back to what it was when you started? What did the non-Del space look at when you got initiated into it?
Well, the big difference, right? Because brokers now are moving to non-Del is you get everything in your name from the standpoint of all the docs.
Yeah.
And you're trying to appear to be more in control of what you're doing. And it's a little different lending. You can make a little bit more money. You have some different flexibilities that you don't have as a broker.
Yeah.
So the beauty of it is your risk is still minimal. So the warehouse lines love us because we're not underwriting it.
Right.
People that are underwriting it are going to buy it. So you don't run into many issues.
Yeah. One of the things that I love about your experience with this is that you are a believer in the space so much that you advocated it, at NEXA Lending, probably before maybe even the whole organization was ready to go for it. Now, it obviously has led to expansive and explosive growth at NEXA Lending. And can you kind of take me through the evolution from when NEXA first started doing it and how you had to go about and educate your LOs about what this process meant and how it all worked out?
And what's interesting with that is it's not that much different, right?
Right,
In other
right.
words, when you're doing a couple loans, non-Del, you're trying to make a system that is risk averse.
Right.
Keep the risk to the minimum. So you're building it slowly to make sure you don't miss anything. So you were our first warehouse line.
Yeah.
We learned a ton from you. So then we're taking a few LOs, then a few more LOs into the system. When you decide to roll it out, the big thing you have to teach them how to do is price differently.
Yeah. So that question gets asked a lot to the first funding team, and anyone who, regardless who your warehouse line provider is, right? When we go into some of these bigger shops, let's just call it over 100 LOs, oftentimes there is a conversation of should we roll it out to everybody first, or should we kind of slow roll it to those who maybe have a little bit more experience? What was your best practice?
Oh, no, we started it slow with the ones, typically bigger producers, so that if you teach them, a lot of people
will follow
on their team are learning it.
Yeah.
And then you grew it that way. And then we got to a point that it was time to lift off.
Yeah. Yeah. You probably had a lot of people looking over the fence going, hey, what's going on over in this little division over here? You're all the top producers taking a look at it.
Well, all of a sudden you're 20, 30%. Now you're 60% of the volume.
Yeah.
Overnight. It's a big adjustment because the staff has to get used to moving faster.
What were some of the lessons learned in those early days? Keep in mind, right? A lot of people that watch this are broker to banker conversions, trying out warehouse lending for the first time. Maybe, probably not doing the volume that NEXA Lending was even doing back then, but still the same fears come with it, right? The same, I want to do it, but I'm fearful of it. Any lessons that you take away as you sit here today?
Make sure your staff understands how to say no.
Yeah.
and how to explain it, because that isn't always easy.
Yeah.
Every loan officer wants it now.
Right.
And I was a loan officer, I wanted it now. So I
Right.
don't think that's a big deal. It's just understanding how to manage expectations and keep down. And we have a staff that is great at emailing, and we had to teach them how to pick up the phone.
Yeah. It was
I get our third email because that's a disaster. But
oh yeah, the emails out of control in our industry, regardless of what
yeah,
what avenue you do. Uh, People look at email as an instant chat feature at this point. It's like, there is an instant chat feature. It's called the telephone.
right. Well,
Uh,
and email technically is passive communication, but
yeah.
it's not
We
anymore.
we go off track. One of the things that I know that you really put a lot of controls on when you first got started was the amount of investors that you wanted to add. Now, in my seat, when I see that broker to banker conversion, or when I see somebody get into the non-Dell space, there's two philosophies. They either go in very slow with a couple of investors, or every investor I've ever worked with, let me have at it, let me get into it really quick. Now, being risk adverse, understand it's probably best to get to understand how the process works with two or three investors at the very beginning. Do you agree with that philosophy?
Oh, absolutely. You get a couple, you learn their process, you write your SOP. That way you can train other people on it, and then you come up with a system. Because our system was, if we were signing up somebody new, the closing teams met first,
Oh, wow.
or the LOs got to see it or hear about it.
Yeah.
We had the back end fixed, because if you have the back end ready, then you'll be okay.
Oh, very interesting. That's a really interesting. So you had your closing team kind of take the lead on the first and ask all the right questions. I'm sure they had a checklist of questions that they had to go
Yes.
over. That's really interesting. That's an interesting philosophy.
Well, rolling out to the LOs and not knowing how it's going to close and fund and what's going to happen at the end,
Yeah,
it's never works out. So it was a system that always proved to work.
got it. What's been the key to success with NEXA Lending growing so much in this space, in your opinion?
Constantly trying to get better, like
Yeah,
we move fast all the time. So
yeah,
that's one of the reasons that it's grown, because LOs feel like they're getting more bang for their buck all the time, because
right.
we're always trying to make it better or find a way to do that. And wait for July 3rd, and you're going to see the next evolution. We'll see how it's it's on time.
I've seen some things. I've seen some social media posts about July
Yeah.
3rd. The mortgage industry loves big announcements these days, so I can't wait to see what it's all about.
And oh, it's going to be fun. But and the beauty of it, at the bottom of it, is that LOs will get a little bit of money for servicing on some loans, and then we'll be able to keep up with their clients better.
Yeah, gotcha, gotcha. So let's go back to the beginning stages, right? I know from my seat, the non-Dell space, when I was cutting my teeth, I got introduced at my former employer, Plaza Home
Yeah.
Mortgage, um, the idea of doing docs and disclosures was far out there, right? The NEXA Lending was going to be responsible for that on the non-Dell side. Um, has that really helped the growth in your eyes about the investors taking some of that onus off of the lenders?
By the investors doing docs, you
Yeah,
find that they get more business too, because for the LO and the processor, going through a third party doc company does take more time and effort.
right.
I mean, there are people who do it because the price sometimes is better,
Yeah.
or whatever reason, but that's learning another system. So for the bigger companies that do it inside their system, we find more business goes to them.
It's real. Okay, so this is an interesting difference. Being that I'm relatively new in the seat, I can't say that forever. I've been here for 2.5 years now. But when we went into credit committee and brought you guys in for a line increase most recently, the idea that the senior credit committee members, right, behind the curtain, right, behind the shades, as I sit here today, I don't get to make all of the decisions about who gets a credit line. I'm just I'm the sales manager, but we have a credit committee that meets and talks about, the risks, the wins, and all that other great stuff. And they're way more seasoned than I am in this industry, and they were looking at the size of the line that we wanted to get, and they're like, "Well, how come this customer isn't going delegated? This is a delegated customer, right?" And I looked at them and I go, I don't believe that many customers these days want the risk of going delegated.
Oh, we do not. Absolutely not.
Yeah. It's an interesting philosophy though, right? Wasn't that the natural evolution, was to go from non-del to del?
But we couldn't survive on the margins we survive on now if we went that way, because we'd be taking on significantly more risk,
Right.
more potential buybacks.
Yeah.
And we couldn't survive on how we've grown so far. Plus, if you underwrite an FHA loan, you can't have 1099 LOs, and a third of ours are 1099 LOs.
Oh, wow.
So once you underwrite an FHA loan, if NEXA did it,
Yeah.
I mean, it doesn't matter if Plaza does it or somebody else.
Yeah.
That goes away. So that'll never happen.
Yeah. I mean, you guys got so many great partners on that side of it. I am sure someone comes knocking on your door and says, "Let's do this. Let's go the delegated route." And your philosophy as a company at NEXA Lending is, we're good, right? We're good here.
Absolutely.
Yeah. What's your next evolution at NEXA Lending? You guys got your hands in so many different things. What are you guys working on these days?
July 3rd.
All right. Well, let me ask it a different. Let me ask it a different way. What is the reason that the growth is happening and you guys are expanding at such a rapid pace? What's the philosophy of where you guys want to be?
5,000 LOs.
Okay.
Mike Cordes says he wants to be in front of a congressional committee, something for growth, or however big the company is. And I'm like,
yeah. Well, be careful what you wish for. Sometimes you don't want to
go. That could be a little tricky, right?
Yeah, exactly.
But the idea is we want to make it, we want the LO to be front and center of the business, right?
Right.
They do the toughest job. They deserve the most money.
Well, okay. Well, let's talk about
want them to benefit and have more options.
Let's talk about it. I'm a neutral third party. NEXA Lending does a lot of great things, but you also have some detractors out there, right?
Yes, we do.
Talk to me about that. What is the visceral that comes to you, and how do you go about it in your daily business?
From the standpoint of
just
how people see NEXA?
Yeah.
Well, I mean, you get to be a certain size and you're going to have haters. Plus, we used to throw rocks too often in social media.
Yeah.
That's stopped now. So that's good. So
yeah. And what do you think about where the market is headed? I mean, obviously we're recording this in end of May. We had tremendous momentum in the first quarter of 2026. It's kind of taken a little bit of a hit recently.
Oh yeah.
What are you seeing? What's next? And more importantly, knowing that NEXA Lending wants to put the loan officers front and center, how are we supporting the actual originator in a challenging market?
We have a team of 44 loan officers who sit in what we call loanofficersupport.com.
Yeah.
And they are in there to help LOs with the company or even outside the company if they come in and are looking for some sort of information. So, and we also have lenders in there that have rooms in our Zoom. So we have tons of support for LOs and what they need or what they want from the perspective of, you need answers, this kind of loan, how do we get it closed from commercial to residential? So there's a whole group that's what they do.
Yeah, NEXA Lending's always been keen on education. I know that from previous previous stints with you guys, and working in that LOS support room. So that education always is very important. All right, what do you want to do with your non-Dell channel over the next 6 months? What's the growth pattern that you want to see?
I think from the company perspective, you want it to continue to grow. So we've consolidated some of the lenders to try to boost up the lenders that we have, what we call NEXA 100, to make that a more viable business opportunity for them and us. And what you see with that is more LOs starting to come over that see how the non-Dell works and what the advantages are. Because one of the biggest advantages in the non-Dell world is if something goes wrong in a loan, you've already got everything in your name. You can go take it to a non-Dell lender and drop it in there and be done in 24 to 48 hours. God forbid anything goes wrong on a loan, but we know what happens.
Yeah, it does.
What's your advantage? Well, in correspondent, you can't do that. As a broker, you got to start you got to start your days over again. Non-Dell, I don't have to start my days over again. I can drop and be done.
Well, so this is an interesting philosophy, and I want to know your opinion about this, because this happens quite a bit whenever I talk to non-Dell business owners, small or big. I know for a fact, Mr. Neill, that LOs come to you and say, I just heard about flavor of the ice cream month lender. They want to get approved non-Dell. Can we add them into the process, right? And you already mentioned that you bring in your closing team first, but how do you talk to the LO without fear of losing the LO if you just say, we cannot add any more relationships at this time?
No, we tell them when we can't, but we make sure they're on the broker side.
Yeah.
And you can still broker to them. Yeah. It's just not their time. And there's so many companies that on the broker side that don't do non-Dell anyway.
Yeah.
Only a handful. So it's not like and you can only have so many lenders in non-Dell, in my opinion, that do the same type of loan.
But you also hit on something key, which is you need to have a very strong relationship with your investors in the non-Dell space. Mm-hmm. Because when something does go sideways, you can't be, I'm going to use a number. You can't be like, hey, I sent you one loan out of the 5,000 that we closed last month. I really need your help on this particular loan. But if you sent me, if you sent wallet share, if you sent 10% of your business, that's a different conversation. Yeah, of course, that's that relationship. While it matters across the board in all of our industry, it matters very much so in the non-Dell space to be a problem solver when things do go sideways.
Oh yeah, when you have a CD that was somebody miscounted days,
yeah,
all of a sudden you got to reclose it.
Yeah,
these things happen.
Yeah,
right? That's an easy fix at least.
All right, I know a little bit about you. I know you're a huge sports fan. We're in the middle of the NBA finals right now, or the NBA semifinals. Who are you rooting for as we get to the close here?
Being a Suns fan, I don't have much to root for the last few years, but right now you got to figure out whoever wins the Oklahoma or San Antonio, whoever wins that is going to win the title. That would be shocking if they did.
You, as a basketball aficionado, have you ever seen a player like Wemby come across your eyes? I mean, it is insane.
Well, when I watch highlights, the only thing it reminds me of is Chamberlain being shorter, because Chamberlain blocked everything, right?
Yeah.
And we can block everything. So it's kind of like, to me, the next evolution when he bulks up a little bit.
Yeah.
That next evolution, he's crazy. It's like he's everywhere sometimes.
Yeah.
With that.
All right. Well, Mr. Neill, I can't thank you enough for your time. Really appreciate you. I know NEXA Lending, July 3rd, I guess, is going to be some huge announcement, and I'm excited for you guys. You guys continue to be, you continue to lead the way in the industry, and I always appreciate the relationship that we have, and we're super excited about your continued growth. Thank you so much for joining us.
Appreciate it. Always good to see you, Matt.
Thank you, bud.
Thanks for tuning into the Non-Dell Influencers podcast, powered by First Funding. For more resources and episodes, visit nondellinfluencers.com.